Hi traders, and welcome back for another video. My name is Gary Fickard, and we're going to be talking about what is moving the markets. At the moment right now, the talk around the town is of course about Brexit. Where is Brexit going to go? Listen, I have a trading room and I have a lot of students asking me about, should we stay in the pound? Should we look at trading the pound? What should we do? Well, I know Brexit is an issue, and it's going to come to a point on the 31st of October where a decision needs to be made. Now, whether they go ahead and extend it out to 2020, we don't know. The talk is that it is going to take place on the 31st of October. Now, the question here is that a lot of traders have been asking is, how do we trade it? We're going to talk about that right after this message. All right, traders, well, welcome back, and I'll tell you something. A lot of traders and a lot of speculators out there, they make great cases about Brexit, right? The supporters of Brexit and the people that are opposed to Brexit, they make good cases why the UK should either stay or remove themselves from the European Union. But what does the technicals tell us? Because this year, as technical traders, we got to read the charts, and the charts tell us a story. And if we can understand what the charts are telling us, we can almost predict what could happen in the marketplace. A lot of times this year, when you go back to the charts and you look at how the technical analysis has been set up when you start seeing these big moves in the market, a lot of times if you are on the right side of the trend, which means that you are trading the correct trend, you're picking up quite a bit of profit. The problem with a lot of traders is that traders try to pick bottoms and tops, and that's the biggest problem that a lot of traders struggle with. Is they struggle to actually find the bottom or find the top, and they get themselves caught up on the wrong side of the trend when the market's moving the most. So let's take a look and see what's going on with the market right now and how we can identify what the charts are telling us and stop trading by your heart, but start trading by the chart. Let's take a look at the chart right here. So this is the chart on the pound trade against the Aussie dollar. Now, if I take a look at this chart right here, this is the daily time frame, and you can see that we have a very, very bearish downward trend. In fact, let me go ahead and draw a trend line right here, and it's coming up from the top right here all the way down like this. Okay, now, the market has gone ahead and interrupted the trend. We've seen that, right? We've got this interruption to the trend. And with this interruption to the trend, the market's gone ahead and moved a little slightly upward, but still slightly consolidated, right? So it's gone ahead and moved outside the trend. The only time that this trend will be adjusted, the only time we're going to adjust that trend is when the markets actually, in fact, start breaking through the lows down here again. Then we'll go ahead and adjust the trend and start looking for a downward trend. We get it, we understand it, we got it, right? Now, this is the deal right here. I want to go ahead and move back to this chart right here, and I want to go ahead and look back at 2016. In 2016, you can see right here, traders, that the market's been trending up. Maybe not as aggressive as the move from 2015, as we saw that big move down in 2000. Well, I would say probably halfway from 2014 to 2015. We can see that there was a very aggressive move to the downside. But ever since then, since around about 2016, we've had the market move up, which is close to 4 years. 16, 17, 18, 19, right? 4 years. So in 4 years, the markets have been moving up. Now, a lot of traders go ahead and they get themselves all caught up in this move right here. They go, oh man, big dog, what is going on? What wave are we in? Or is this the wave 1? Are we heading down to wave 3? Are we in a wave 4 retracement? Where are we? So the thing is this. This is how I look at it. I say, come on, man. All right, let's pay attention to what's going on here. All right, let's go ahead and pay attention to what's going on here in this last bullish move. And if you actually take a look at the details on this bullish move right here, and you start putting in your trend lines from right down here and start drawing it up, take a look right here what we got. We got the market supported by this trend line. All right, and the market showing us that we got support here, we got support here, there, we got support here. This is over a 4-year period, and we've just come back down to support here. Forget about Brexit, right? Now, I'm just kidding. What I'm saying is, if you look at the technical says is, man, big dog, we could be trading all the way up to the top right here. I'm going to go ahead and put another trend line in here, and we could be trading all the way to the top right here as we go ahead and trade towards the top of the channel, all right? So this is what we could be seeing right here. So what does that mean? Well, that means we've just hit a bottom. We've just hit the bottom right about here. Now we're going up to the top right here. How do we know that? How do we know the market's going to go up to the top there? How do we know that the market is not going to turn around right here and head south and start trading further down south? It is always a possibility. We know that. All right, that's something that we cannot change. But what we can change is how we manage our trades. Now, traders, listen here. If you want to be caught up in the wrong side of the trend, that is very easy when you're trying to pick the tops and the bottoms. All right. But when you start seeing a trend taking place right here, which we are right here, when we see a trend starting to take place here and starting to move back up, all right, we can trade that until the trend breaks. Now, how do we break a trend? Well, it could be based on a trend line going up. It could be based on market cycles going up. You can use different ways to identify when the trend's breaking. But this is the thing. We know that unless price breaks through this, right, unless it breaks through that level, market's going to go back up to the top of the trend, which is up here. It's going to do that. So how do we trade this, big dog? Come on, give us the meat of the trade right here. So this is the deal. I'm going to use what I like to use. I'm an Elliott wave trader. For those that don't know who I am and how I trade, I like to trade market cycles. And Elliott wave structure is very important to me. And when I don't see the structure in place, I simply move away and I go to a currency pair that does make sense to me. All right, so let's take a look here. So I'm going to pull up my Smart Waves. This is Smart Waves is a tool I use here on smarttrader.com platform. And I'm going to use the Smart Waves right here, and I'm going to go ahead and plot it right down here at the bottom. Now, I've identified that already the market has created this larger wave 1. There it is. I've gone ahead and used the tool. It's already gone ahead and plotted it out on the chart. Now, if you take a look over here, for those that don't know, the market moves in cycles. All right, moves in cycles. It's a 5-wave cycle. It goes wave 1, 2, 3, 4, and 5. When we complete that cycle, then we are in a correction pattern, right? Where it goes A, B, C, and starts a correction pattern. But the most important for me right now is I want to get myself into that 5-wave cycle because that's where the trend's at, right? Until we complete that 5 waves, we're still in a sort of a trend to the upside. Now, when it hits the top of the 5th wave, we can expect a correction. But if you look at this cycle on this chart right here, and you notice right here, here we have wave 1. I'm going to go ahead and mark it off. Here we have wave 1. Here is wave 2. Here is wave 3. Here is wave 4, which is perfectly in line with what we like to see is come back to retest wave 1's high. So it's gone away. Guess what we're chasing after? We're chasing after wave 5. Now, let me just make sure everyone is clear on this, all right? And the truth of the matter is this. If the markets are not going to finish off that 5-wave cycle and is not going to hit the 5th wave, what are we expecting? We're expecting then an alternative move. What could be the alternative move on this particular pair? The alternative move could be if the market's going to take out the low down here. That's the alternative move. And the alternative move that we are heading down south based on a larger scale. The thing is here, traders, we never know when it's going to happen, right, until it starts taking out those lows. We can't predict what it's going to do right now because right now, the technical says that the market's going to go back up here to the top. It says that. And we're going to continue to trade and believe that that's going to happen until it changes, until the news changes or until the technicals change and show us a different direction. But for right now, we've got to believe it that we're heading north. Now, I'm chasing after this 5th wave up here at the top. This 5th wave looks like this. We were looking for price to come back up to this level right here, and then we're looking for the market to go back down south. Now, when it does that, all right, we'll change our directional bias. But for right now, we've got to believe that price is on its way up. And so here is what you need to focus on. All right. So traders, now what I'm not saying forget about everything else, but just focus on this. I'm just saying for right now, we've got to focus in on this. We have to focus in on this right here, because this is what we're going to be focusing in on. We're going to be focusing in on the market doing this now. There it is. We're now in a wave 1. This is a wave 1. This is a wave 2. We're heading to wave 3. Now, if I go ahead and bring this in a little bit so you can see where it ends up, it's going to end up right here at the tops. See the tops right here? Here we have resistance right about here. This is where we're expecting the fifth wave to go to. Now, guess what? When it gets it to that fifth wave, we're not done. Because what's going to happen then, the market's going to come back in an A, B, C retracement. All right? It's going to come back in an A, B, C retracement. And then it may come back and retest this trend line. Right? We may see the market come back to retest this trend line right here before it starts off with another move to the upside. And who knows? Maybe that's Brexit time. Maybe Brexit is held off until 2020, and that takes Brexit. Brexit then sends this market down south. We don't know. But what we do know is we've got to start picking a direction. Traders, you have to start picking a direction and start being committed to it until the technicals change the direction. So this is the deal. Here is we're chasing after, look at price. We're chasing after this level right here. And this level is priced at roundabout, you see there it's about 186. 186. So 186, how far is that from where we're trading right now? That's about 400 points. We're looking at about a 400 pip rally to the upside. And to the highest point of this move, we're looking at about 600, close to 700 pips, right? Called 670 pips. So that's what we can expect as the market goes up. Now, I want to make sure that everyone understands, all right? I wish the market would just go in one direction and not even retrace. It's not going to happen. What's going to happen is this. The market's going to move in waves. And we're going to see the market do something like this. It's going to go up, down, up, down, up, and then in a retracement, and then up, down, and that's how it's going to go ahead and move. That's how we can see how the market's going to move and how the market's going to move in this sequence of cycles, right? And so it's important for us to know that. So traders, what am I saying? At the end of the day, I'm saying we're a buyer in pound Aussie dollar. Yes, I understand Brexit is there, and yes, I understand that the markets can be affected by the news, and the news can obviously change the direction or buy it. But at the moment right now, we have good reason to believe that the pound Aussie dollar is on its way up. And it's on its way up for at least 600-700 pips before it hits major support, major resistance, and then starts turning around, starts heading back down south. Traders, watch the pound Aussie dollar. Keep your eye on that. Sure, Brexit could be something that traders will be aware of, so don't be married to your trade. If things change on you, make sure that you are ready to go ahead and make the changes. All right, traders, well, that's a bit of insight on the pound Aussie dollar, a bit of insight on Brexit and how I would approach the Brexit news. Keep trading as you believe yourself as a technical trader. Believe yourself as a technical trader. Follow through the technicals. Place your stop losses at the right places, and if the market changes, look for the alternative. My name is Gary Fickart, and I'll see you in the next video. Thank you.